Hola y bienvenidos. Welcome and hello and welcome. Thank you for tuning in to Un Poco Mas, the show where we give you just a little bit more. It is May the 6th, 2024. It's after market. I don't know what time it is. It's about 3:35 in the PM out here in a beautiful sunny Los Angeles. Hope it's a great day wherever you are. Guys, we are talking SOFI Technologies Incorporated. The ticker symbol is SOFI. Man, it was just a lot of buying in the beginning of the day, ran it up just to the level where those $7 calls were not going to pay. Then they slammed on the brakes. The algo really kicked in. There was some buying coming in, about 50 million shares traded on the day. Let me share my screen with you fine gentlemen and ladies out there. Hope everyone's having a great day today. Welcome and hello and welcome. Guys, I have been just working like a dog, working for the man. Haven't had a chance to make a lot of videos. I introduced Operation Fireworks, which is our master plan to not pump the stock, but just support the company in Q3. Q3, Q4, historically stronger. Let's not forget that Q1 has always been very weak for member ads, at least the last few years. Remember, SoFi's, of course, only been a public company about 3 years. But you know, they bucked that trend and did really good member ads and extremely good, bank deposits this last quarter. And if you really kind of cut through all the noise, that those bank deposits are what drives the business. It lowers, their cost of loans by about 2 points, which is just very, very dramatic. If you compare, sort of those net interest margins between some of the big banks and a company like SoFi, SoFi's margins are just insanely huge, of course, because they're so, heavily weighted on the personal loan side. They don't have some of these other loans that are at much lower interest rates. What's up, guys? Welcome and hello and welcome. Colombian Kingpin once again ahead of the curve with that intelligent look where he's just kind of, very pensive, just pondering things with his hand across. He's got, I don't want to speak out of school, but he's got a mature sort of a hairline there. Looks like the kind of guy, if he was your surgeon, you'd think he'd be in good hands. Looks like, just maybe if he was your airline pilot, you'd be looking just... just really stable. Not a lurker, of course. Not a lurker is here. Welcome and hello, Not a lurker. Thank you for producing the show. Missed Not a lurker the last few times on my Midnight Madness show. He was getting his beauty sleep, which if you've seen him on SoFi Weekly, you know he doesn't need it. The guy's got the best looking shaped head in the industry. A lot of people thought he was the inspiration for the original Humpty Dumpty nursery rhyme. No, I'm just kidding. Not a lurker. Love you, buddy. Welcome and hello. J Money's here. Parker Ivy is here. Welcome and hello. Leo Longevity's here. Hola, Leo. Hola. Bienvenidos. Welcome and hello. Guillermo Aranda, un poco más. I'm trying, Guillermo. I'm trying to give you un poco más. Mi amigo. Sorry, you can tell my Spanish is a little bit rusty and crusty. M. Russo. Sorry, Tanner. I probably won't get any viewers. I didn't know Tanner was going live. M. Russo 215. That's okay, guys. You can watch me on the replay. I don't give a rat's patoot. Leo Longevity, we're going into SoFi, guys. Hello and welcome. Benji, what's up? Parker Ivy, what's up? Alberto Bertie Avilés, our newest moderator, is here. What's up, Alberto? Good to see you. My brother from another mother, it's Alberto. Parker's in the house. Watch out, the house might not contain it. Welcome and hello and welcome. It's Low Country Loot and Pawn. If you guys need any fast cash, surf on over to Low Country Loot and Prawn. It gives you the best price for all your gold, bulk jewelry, diamonds, whatever you got, whatever you can steal off your grandma, go buy your methamphetamines or whatever you need. Low Country Loot. No, I'm just kidding. I don't want to disparage the pawn industry. Pawn people are good people. People need money. What are you going to do? And a lot of people just don't have, home equity lines and, things like that you and I might have, the ability to trade on margin, ability to borrow large sums of money at relatively reasonable rates whenever we want. We sort of take that thing for granted. Other people have to go out and take, payday loans or, borrow money from their Uncle Vito at like 3 points a week in cash. So welcome and hello and welcome. Sorry if I've had a little bit too much coffee. I've actually only had 2 cups today. But still feeling a little bit pumped up, a little bit jumpy. It just feels like I've got a case of the Mondays. But guys, SoFi traded 50 million shares today. We went over that. Basically pumped for about an hour and then just traded sideways right in between 720 and 715. Dipped down there at the end. I think went down to 710, 711, then just popped back up to 715. 1 penny down after hours. Nothing too eventful there. If you look at Max Payne, absolutely no surprise. $7. So obviously there was a lot of calls out here at 7, a lot of calls opening up here at 7. The puts are almost all at 7. So it's one of those days where Max Payne is going to be really hard to, or one of those weeks where Max Payne is going to be really hard to overcome because there's just not a lot of separation between the calls and the puts. It's like whether you're bearish or bullish, whether you're short or long, you're kind of expecting this week to end up very near the same place. You don't see those peaks, far apart as you will when, things tend to be a lot more volatile. And then if you look at Max Payne on a cash basis, actually a little bit closer to 650 than 750, it looks like. So things are just looking kind of bearish as far as the options. It's kind of odd because if you shoot over and look at the options sentiment that is coming in, you see today positive order value 100%. Wednesday, 2 orders totaling 115,000. 1 week positive order value 83%. So the options flow is looking positive, but Max Payne, I guess that's more recently, but there were some bearish bets earlier, which I think you're seeing in open interest versus volume. Taking a look at the short guys. Shorts were just on tilt. They borrowed 9 million shares today. They borrowed 9.4 million yesterday. Already they had, this update's a little bit slower than it used to, but they had 300 million shares on loan, 202 million shares short. Utilization, 88%. That's about the highest I've ever seen it. Short score 75. That's not quite the highest I've ever seen it because they did add some shares. There's the constant drip of dilution, so they can short a bit more and it might be the same percentage wise, but short interest right now is showing 20%. And again, heavy borrowing Friday, heavy borrowing today. So that's got to catch up. I would guess there's well over 300 million shares on loan. So you're talking about, over a quarter of all the shares that exist are borrowed right now. What's up, turds? Hello and welcome. Welcome and hello. Parker Ivy's just calling everybody a turd. I'm still coming down off the Cuban coffee I had 2 weeks ago. Yeah, I love that Cuban coffee. Any coffee with any, foreign sounding name that comes in a really small cup is basically going to have you wired like some Peruvian wham wham for the better part of the evening. Don't think about going to sleep. Don't sleep on those little tiny cups of strong coffee you get in foreign restaurants at the end. They're like, you like some Brazilian coffee? I'm like, sure, why not? Like 2 a.m. I'm like, glad I got that Brazilian coffee. Let me show you something. Fire Marshal Bill comes out. Anyway, a gentleman's turd. Nala, speak for yourself, turd. Hurricane Lopez, limit 2 cups of coffee. I know you sound like, my favorite YouTuber, Tevis. Tevis is here. Welcome and hello, Tevis. Thank you for joining me. I have really enjoyed some of your content. It was great to see Steve back the other day. Love the Tevis and Roy combination. It's kind of like Laurel and Hardy. It's just a great sort of straight man. I don't know. The evolving Canadian fintech U-turder landscape is just endlessly fascinating to me. But I don't know. It used to be Tanner was sort of the center of my fintech universe. I've kind of shifted to a multipolar world, like Russia wants, where not one group is completely in charge of world affairs. Now I'm kind of, I'm of 2 camps. I have the Tevis camp. I have the Tanner camp. I'm a huge Roy fan. So I never thought in my life I would be, have so much interest in online Canadian fintech analysts, but it seems to occupy an awful lot of my time. Somebody even told me Roy's Canadian. I thought Roy was like from Utah or Texas or something. Everybody's Canadian. We're all Canadian now. Anyway, guys, Matt Flo, welcome and hello. Leo Longevity, welcome. Not a lurker, Matt Flo. A lot of VIPs in the house. We got Matt Flo, we got Tevis. Roy is from Texas. Okay, that he sounded to me like he's from Texas. That's what I thought. And he has sort of a hairstyle that's from Texas, like something, came into vogue in the 80s and you just stuck with it. Welcome and hello and welcome. Yeah, Minnesota, that's basically Canada. Same thing, man. You guys are all wholesome as it gets. You guys are all wholesome as oatmeal. Anyway, guys, I want to talk a little bit about this timeline. Sorry, I tend to ramble endlessly, but guys, my contention is this. Noto has planned this thing out meticulously, and he doesn't need the stock up now. And in fact, it's benefited him and these deals, the counterparties, to have the stock price, in fact, lower. It's allowed them to get out of these, high dividend shares that the interest was going to be killing them. Doing that's a lot more important for Noto in 2023 and 2024. He needs the stock up in 2026 to, get his options to vest or whatnot, his preferred shares, whatever the technical name for him is. So I'm basically saying everybody's saying, oh, the shorts are in charge. Noto's so angry at the shorts. Noto wishes he could say something. Noto wishes he could fight back. Guys, Noto can do these insider buys anytime he wants for a couple $100,000. He's a very, very wealthy man. It's absolutely no big deal. He can come out and say things to pump the stock. They can come out and raise guidance whenever they want. If you think Noto can't, the problem is for Anthony Noto is once you overrun the stock and Wall Street becomes disappointed in you and you were the high flyer, you were the darling, and then you fall, it takes an awful long time to come back. That's why for Noto, it's not about just pumping the stock whenever. It's not about convincing Wall Street and institutions that this is a great company long term. I'm going to just take you brief look at Steve's new article in Seeking Alpha, because it makes the case for the tech company and the hybrid tech valuation, I think, more clearly, more intelligently, easier to understand than anyone's ever made it to date. And it's actually not that hard to understand. If you look at, Gary Gordon, one of his things that, hey, I just don't understand. It's far too hard to understand. There's no literature out there. Steve makes it, they're selling software, guys. It's actually not super hard to understand. It's a business, as Steve notes, that you can scale. It's going to have absolutely giant margins. There aren't that many competitors out there in this space that are built like SoFi. That's actually a myth. Competitors with all this back end, who also own the bank, who also own the front end, who can prove the concept in-house. There's just no other SoFi, and it's not as easy as it is to build. I know the Gary Gordons and some of these other, bears who, whether it's Morgan Fudley or the bologna sandwich or the Chia Pet or some of these other, nincompoops who, put the price of the stock, the target, just at book value, and that's it. And they don't acknowledge that the company's growing, that the company's working toward great margins. Remember, when Noto talks about the structure of this company, he kind of does a wink and a nod. He goes, we're going to stick with 30% EBITDA and 20% bottom line. He's like, it could be better, but I'm going to stick with that. He knows that these margins can go a lot better than 20% as this company scales. I mean, if you look at the assumptions they're making to get to 55 to 80 cents a share, EPS in 2026, we have to assume their growth curve in terms of profit is about to explode. That doesn't mean the top line growth is going to explode the same way. The company gets more efficient. The company takes every new dollar and takes more of that to the bottom line. So that's what's so great about this company, is the way that it's structured, the cost structure. They can grow their user base, they can grow revenues, and they cannot grow costs correspondingly. The costs grow much, much slower. That's the digital, that's the core, that's owning everything, that's the vertical integration. Noto's been working this master plan. Let's go to the timeline, guys. And while we do that, let's go ahead and take a look at the chart, because I know everybody's been freaking out. Everybody from trending stocks to STAs are like, hey, this thing's breaking down. It's broken down all the way. It's going to go into the fives. Guys, this is where we were. We were getting support along this line, which had been resistance here. This sort of aqua green line had been resistance right here until December, flipped and then became support. And then right here at this point, right around March 6th, this big gap down, support kind of shifted from the green line to the red dotted line right here at 7. And though it's broken down below 7 briefly here in November and December, and briefly here just a couple of times recently, realistically, there's been no sellers of the stock under 7 since last June. And that's just a fact, guys. This support is held. we're not going to see any retracement down to 5, because I'm like, what are these guys talking about? There is no retracement down to 5. Back here, do you have your head up your ass? I mean, I don't even think people, maybe I don't, but I don't think people understand what they're talking about. This stock is just absolutely kicking and screaming to go 1 inch under 7. It's not going under 5. Noto's been planning this whole thing out. Look what Noto was doing, you freaking simpletons. 2022, 2023, sees these high rates. He says, we're going to grow. We're going to grab members as fast as we can. We're going to grab deposits as fast as we can, because we're setting ourselves up for when macro conditions are more favorable, so we can actually prove what we can do. So he gives this number. He says Q4 2023 GAAP net profit. They're saying that quarter after quarter, way back. It's meticulous planning. He knows he's going to do it. Noto hedges against risk. The risk doesn't mean anything to him. Noto's smarter than risk. Noto looks risk in the eye and he laughs. He says, fuck you, risk. Not today. Not today, motherfucker. Anyway, guys, I pardon my French. Pardon me, 1,000 pardons, Captain, 1,000 pardons. Hello and welcome. Stockman Mark is here. Welcome and hello, Stockman Mark. Leo Longevity, we need to be patient. I'm absolutely going to be patient. I'm adding shares, adding leaps, no problem. I just don't want you guys to sell out at the lows. I'm absolutely not going to do that. Who bought at 660 during the crash? I was not lucky enough to pick up any shares. The last I bought, I think, was 672, which was a few days ago. Bought 2,000 shares. Diaper Dad is not here. Bobby Joe is here. Hello and welcome, Bobby Joe. Good to see you, Beach Boy. Good to see you, Mach 80. If the tech is so good, how do you explain loss of client on Galileo? Well, actually, Galileo, I mean, they lost a big customer quite a ways back. I think their second biggest customer, and then Noto kind of said we have to jettison some of these smaller customers that aren't bringing members to the table themselves. We have to grow with them. There was a transition. So, I mean, it's a fair point. But the clients, the accounts actually grew last several quarters on Galileo, and I can show you that, Mach 80. But yeah, it's a linchpin. The whole thing, the whole valuation hinges on tech. And that's just what, so Q4, they make the net profit that they've been targeting meticulously for a long time. And management tells us we're going to be profitable henceforth. We're not going to have any more unprofitable quarters. A lot of people thought Q1's going to be that quarter. No such luck. So not only do they make 1 cent, they make 2 cents, they beat, and they raise full year guidance. And here we get into this Fugazi where it's like, okay, Q2 being weak, that's the end of the world. I've just never seen anything so stupid as this. It's like, this is a cyclical business. They have stronger quarters, they have weaker quarters. They make decisions about quarters they're going to put in good, they're going to put in the bad. So these things are not just, straight up 100%, objective decisions. There's some subjectivity to it. Where do you put things in which quarter? How do you make certain decisions? When do you take write downs? When do you take, write ups on the value of your loans, etc.? It's not just all set in stone. But here's the thing, guys. When they came out with Q1 with the ER, they raised full year guidance. Why is it a big deal that Q1 and Q2 are going to be slow? And everybody's making, well, their top line is lower again in Q2. Even if they hit the top of the guidance, the adjusted EBITDA will be lower again in Q2, even if they hit the top end of the guidance. And I would argue, number one, they could do far better than the top end of the guidance. The NBA playoffs could bring in more members than we think. There could be, more activity in terms of student loans. We're already seeing that pick up. We're already seeing home loan originations pick up. So I think the businesses outside of personal loans are doing very, very well. And the pullback on personal loans, I mean, Chiavarini again comes out and makes the argument that SOFI is somehow capital constrained. It's just ridiculous. You're not looking at the objective facts. You're not looking at the ratio. They have $3.7 billion in cash. They have so much capacity to make loans that they're choosing not to use. That's why I said last time, why not at least authorize $500 million share buyback? I mean, I'm not saying they're actually going to do it, but authorize it. At least threaten to put the capital to work against the short sellers. That's one thing you can do. So as we go on, why is it so important? 2024, all we're going to hit net profit because Noto is timing for S&P 500 inclusion. That's when you really hit the big time. It's not 1 quarter of GAAP net profit. It's 4 quarters in a row, 5 quarters in a row. 4 quarters doesn't necessarily ensure that they're going to include you in the S&P 500, but with the size and the growth and the type of company SoFi is, it's almost a shoe-in. So they would be S&P 500 early 2025. And look, go back to the timeline. When does Noto need to pump the stock? 2026, 2027, 2028 to make his options pay. He can ride off into the sunset with $1 billion, whatever it is. Go buy his own island, whatever he wants to do, or maybe move on to another job. But I just see him there around another 5 years, 6 years. He'll definitely be at an age to go ahead and get out, and he'll definitely, I think, the way he's manning the ship right now, he'll have the resource to do so. So we see 2025, early 2025, S&P 500 inclusion. 2025, the EPS and the stock price starts to explode. 2026, you see that 55 to 80 cents EPS. If you're up near the top end of that range, you're going to see, 10 times 10 times multiple, and the company's just going to look extremely, extremely undervalued because you have to think rates will have probably come down significantly by that point. And very hard to predict what the economy will be doing, 2 to 3 years out. I certainly don't have the intellectual capacity to make that happen, but I just think Noto does, and I think he really knows what he's doing, and I think he's playing this so as we get toward the second half of this decade, later on in the decade, SoFi and Noto, absolute financial powerhouse. Noto knows the key to this valuation is Galileo. So, but also the efficiency of the company. That's the thing. One of the segments I was reading, one of the articles, they made actually less revenue, but more profit because they're just getting more efficient as time goes by. So very, very good news there. But if you look at the chart and you look at this more closely, you can very clearly see this channel topping out at about $7.91 right here. This is going on for about 2 months since this gap down. It's basically between 7 or just below 7 and 7.91. If it breaks above this line, which it touched it today, this blue line, we can expect the stock, I think, to move up convincingly. Like I said, this Q2 guidance is just a Fugazi reason to hit the stock. Say a basketball coach, his team is playing and he's winning and it's the third quarter and he says, okay, we're going to rest our starters in the third quarter because we have a big lead and we're going to bring our starters back fresh in the fourth quarter and close out the game. Nobody says, okay, you won the game by 20 points, but you lost the third quarter by 2 points or 3 points. You won the rest of the game by 23 points. You won the whole game by 20 points. But that third quarter, he's like, well, I'm resting my starters. It's strategic. It's a strategic move. Don't you see? Oh, fucking idiots. Why is it a bad thing if Q2 is lower and then Q3 and Q4 are extremely strong? I guess they don't believe Q3 and Q4 will be extremely strong, but I believe management until there's a reason not to believe him. You don't fault the farmer because his harvest comes in at one time or several times during the year. Why are you doing all that work? You're not, harvesting any crops right now. He's like, you're laying the groundwork. You're laying the foundation. We build our house out of bricks. We're SoFi. We're not some clowns. It's like, Brooklyn Stock Shop says, these bozos, these clowns, look at these other fintechs, Affirm, Upstart, Robinhood. These are casinos. These are bullshit guys. These are loan brokers. These are Fugazi nonsense bullshit companies that are going to be out of business while SoFi is growing into a top 10 financial institution and powerhouse. Oh, Bardem is here. Premium of the Option is here. Hello and welcome. Welcome and hello. Anybody else new here? BZ is here. AA Lopez is here. Stockman Mark, of course, we already said hello to. Hello and welcome. Mike Hill is here. Welcome and hello, Mike. Hello and welcome. Oprah's Thick SoFi Bag is here. Matt Flo is here. Steve in the Mountains is here. What's up, Steve? Good to see you as well. Parker Ivy is here. Air Force is here. Poopadu Anoto 2 is here. Leo Longevity. Premium of the Option is here. Stedman made him change his name. Yeah, he didn't like that musty Musty Wet Cave, Into House, Parker and Poto, LMFAO, that party anthem band. So guys, so going on with the timetable, you can see where this is going. 2026, we can get near that 80 cent EPS number. You know, it's going to be a gravy train with biscuit wheels that we're going to be riding on here, folks. So kind of I highly encourage you guys to read this article. Stephen Fiorio, it's good to see him back with the boys the other day. I know he's got some big new career opportunities, and he is just crushing it. So we're all very happy for Steve, but it was, of course, really nice to see him back on, because we all like to see his analysis around the ER. And this is just another great article. The part I would focus on here is the tech. We all know, the beat. We know the full year guidance raise. We know how they're hitting their objectives. I would also encourage you to go back and read his previous article and the risks. But engagement across SoFi's ecosystem continues to expand. This is where he's talking about, actual cross-selling. He's talking about the member ads. He goes through the deposits. But the part, that I really want to focus on, one is the deposits. SoFi is growing deposits faster than any bank that Steve tracks. You see 16% increase between Q4 and Q1. State Street is the only other bank growing even close. Bank of New York Mellon, and then anything below that, like Wells Fargo, had a good quarter at 2%, Bank of America at 1%, and then some of these other banks, Barclays losing 6%, HSBC losing 3%, Truist losing just a fraction, Deutsche Bank, Citigroup losing just a tiny fraction. So pretty extraordinary. I know it's the law of small numbers and all that, law of big numbers, whatever you call it, that SoFi is still relatively small, so even a fairly modest increase. But even in real terms, guys, the $3 billion in increase is, some of these banks were negative, and others, that like Ally, who's another sort of big competitor with SoFi, much larger. They have $150 billion in deposits. They actually added less in terms of, real number, 418 million versus 3 billion. So that's not a ratio. So you have to ask yourself, if Ally, if American Express Bank, if Discover Bank, they're all offering higher interest rates than SoFi, but SoFi is attracting customers and deposits, and importantly, direct deposits much faster and much more effectively than those institutions. And Steve's argument is because people like, the hash that SoFi is slinging. People like the ecosystem. People like the products. SoFi delivered a strong start to 2024, regardless if Mr. Market didn't agree. I believe this is a classic case of being short-sighted rather than actually looking at the current progress and determining if the long-term vision will be accomplished or even exceeded. Look, 1 cent guidance in Q2 is why the stock sold off 14% in 2 days. I mean, give me a fucking break, guys. This thing was all preloaded. It was all pre-planned. It always is. There's absolutely no way that this ER precipitated that decline. It was dialed in, guys. This is a triple beat. I mean, the fact that guidance is weak Q2, okay, I can see where that would be sort of disappointing and glaring, but full year guidance is there. So if they're going to make it back up in Q3 and Q4, I don't see what the panic is for. On a profitability level, SoFi's guide to 115, 125 adjusted EBITDA would also mark the second decline Q on Q in profitability metric. Of course, the street isn't thrilled with that guidance, especially as the membership continues to expand. The street's saying you have more people. Why aren't you making more and more money? It's because they're in a very, very difficult environment. Other companies, when they're in these difficult environments, their revenues crash. Their profits crash. That's not at all what's happening with SoFi. SoFi is doing very, very well, all things considered, in my opinion. Too many people are focused on instant gratification and are looking 3 months in advance rather than the longer-term guidance management has provided. Throughout 2023, SoFi continued to deliver earnings beats and guidance revisions to the upside. They're executing a plan that is allowing them to increase their top and bottom line quicker than anticipated. Some look at this as Anthony Noto sandbagging the numbers rather than delivering on the vision. Previous earnings call, he didn't just provide 2024 guidance, said he's on track to provide the 55 to 80 cents GAAP EPS in 2026. Maybe the street isn't taking this seriously. We got our first guidance increase from SOFI Q1 2024 on the high end. He believes they'll continue to increase throughout the year, as do I. SOFI is expected to generate $2.43 billion in revenue, 17% growth rate. I think that'll be closer to 20% personally. I think the second half of the year they're going to come on extremely quickly. 175 net income, which would work out to about 9 cents diluted EPS per share. Not only is SOFI's profitability trending in the right direction, its adjusted EBITDA margin continues to expand. It's expected to be at 25%. This probably won't be the last guidance revision in 2024, and I expect SOFI to continue to deliver on its vision while rolling out new products and executing its critical success factors. There used to be a question about SOFI's ability to sell loans. Q1, SOFI recognized strong demand for $1.9 billion. Remember that was the argument all last year by the Chia Pet and the Bologna Sandwich and those of their ilk was that SOFI was in big trouble. They needed to raise money in 2023. Nobody wanted to buy their loans. They were, had a really bad balance sheet. It was all FUD, guys. None of it came to pass. And they're still slinging that same crap, but I don't think anybody really believes it. I just think it benefits. Noto was able to make this deal. People probably, some of these counterparties to these senior secured note deals and all that weren't willing to come in if the price was $12. I mean, it's an extremely different valuation if SOFI is at, 6 point something billion versus if SOFI is at 12 billion. I mean, it's just an extremely, extremely different investment opportunity at that point. One is extremely attractive, one is extremely unattractive. So the fact that the stock price was down when Noto doesn't need it up, and it allowed him to make these deals to exchange some of the debt holders, lower interest debt, things that made a lot more sense for SOFI and Noto going forward. I don't think it's an accident. I think Noto can pump the stock whenever he wants. I think he's in charge of the timeline. I think he could have made profit faster. I think he could have made growth faster. You see a lot of companies, it's the old guns and butter debate, that are growing fast, and you see a lot of companies that are making profits, but you don't see a lot of companies that are growing quickly and also growing profits quickly. And I know profits are dipping down, last quarter or two, but if you look at the overall trajectory of the company, it is really, really solid. And that also goes for the tech company as well. These are student loan originations in blue, home loan originations in yellow, personal loan originations, and then total originations. So the only ones creeping up really, home loan originations, student loans flat, and personal loans flattening out, I think, by choice. This is the key, guys, and I would encourage you to read this part. Why SOFI isn't just a bank and deserves a hybrid multiple. SOFI continues to deliver on its guidance. And this is where, if you say, hey, I don't understand the tech side. What the hell is Galileo? Why did SOFI buy Galileo? What's Technisys? This makes it very, very clear. What differentiates SOFI from traditional banks is SOFI's tech platform being vertically integrated. Over the past several years, SOFI acquired Galileo and Technisys while obtaining a national bank charter. Galileo provides APIs to financial instruments, allowing different platforms to interact with each other. Through Galileo's protocols, company can offer debit or credit cards, ACH transfers, or transactions processing. You can move money all over the place through all kinds of different systems, all kinds of different products, all kinds of different people, send money. It's just, you can do basically everything in real time with less risk. And it's all under one core. It's all provided in one spot. You don't have to bring together a bunch of disparate vendors and all this other stuff, and then another company to provide security. Galileo can handle it all. SOFI acquired Galileo so they could build out their product suite on their timeline without having to wait for features to be deployed on a roadmap. Technisys is a cloud-based banking platform that SOFI also acquired so it could move its entire platform to cloud-native architecture on a single core that can support a range of financial products. SOFI owns the entire back end when it comes to underlying technology banks operate on, and is building out a banking-as-a-service product. Recently, SOFI expanded its services by launching an expense management solution with MasterCard that provides B2B client tools, and you guys can go through and read this. We already know most of this news. For several quarters, Anthony Noto has discussed SOFI's participation, request for proposals for cloud banking solutions, previously stated a large regional bank would be implementing SoFi's cloud banking architecture, and that they were in a proof of concept stage with a large financial institution, top 5 financial institution. Many people have speculated Citibank, et cetera, et cetera. You've all heard that. On a recent conference call, Mr. Noto reiterated the RFP process is not a quick endeavor, can take several quarters, if not years. Recently, SoFi launched a small business financing card program, working on onboarding more partners. Tech platform's revenue grew by 20% 2023. Keep in mind that many of the RFPs are still ongoing. They have not lost and have been down selected in some of the RFPs where Mr. Noto said more institutions were going from wide groups. So they are still in the running. Some of these, they've been culling the group that is in the running for these contracts, and SoFi is still in the running, or Galileo is still in the running, excuse me. This typically means that SoFi is made in the late stages. The vendors who couldn't handle the potential clients' needs have been thanked for their time, but asked not to participate in the next round. Mr. Noto using the words, big institutions, it makes me think that they've been in the later stages of RFP, not only with a large financial institution, but are in the proof of concept stage with several others. Okay, several others. This is huge to the valuation, guys. Listen to Steve. Listen to Steve, you stupid turds, you bozos. Don't thank me when I tell you, you bozos. The technology platform is real, and not every financial institution has the ability to develop proprietary platforms. It's a lot cheaper and a lot easier for most of these guys that come to Galileo. A lot cheaper. And these are contracts, revenue sources that are going to last decades, as Steve says. Galileo's accounts are at an all-time high. For that guy, Mach 80, not correct. Galileo's accounts are at an all-time high. The technology platform generated $95 million in revenue, $30 million in contribution profit. Technology operating at a 38% contribution profit margin. SoFi is just getting started as Galileo and Technesis were acquired in 2020, 2022. I believe SoFi deserves a hybrid multiple between traditional finance and technology companies because it is generating revenues and profits from its underlying architecture in addition to financial services. As SoFi wins RFPs and finishes the implementation process, it will likely gain customers for decades, not years. SoFi has put itself in a position to streamline its own products and reduce their operating costs because they own the back-end platform. They're also driving recurring revenue and profits from licensing to its competitors. This is a scalable business. And as regulations and cyber attacks become more complex, financial institutions will need to deploy cloud-based architecture that complies with the latest standards. Over the next 5 to 10 years, SoFi could scale this into a large software as a service business by offering banking as a service. That is why SoFi isn't just a bank and why hybrid multiple is justified. And here you see the accounts. They climbed from Q1 2020, 30, 36, all the way up to 131, Q4 2022, fell back during the transition, the reset to 126, 129, 137, 145, been adding, anywhere 6, 7, 8, 9 new accounts per quarter. So that's actually a good thing. There's so much potential for SoFi in the future. It feels like they're just getting started. SoFi's customer base continues to expand, bringing billions in additional deposits each quarter. SoFi continues to strengthen its company by eliminating more than $2 billion in debt from its balance sheet to offering new products for its customers. I think Mr. Market is being short-sighted and focusing on potential Q-on-Q revenue decline rather than on the actual 2024 fiscal year guidance. I expect this won't be the only guidance increase Mr. Noto delivers through 2024, and based on the midpoint of his 2026 guidance, shares of SoFi are trading around 10 times 2026 earnings. SoFi has many levers it can pull, including entering small and medium business banking, building out its asset management division, implementing 401k and 403b custodian services, and pioneering the banking as a service space through its own tech platform. While the street is down on SoFi, I am very bullish. I see paths senior leadership is paving and believe they will continue to grow earnings well past 2026. Let's have a round of applause for Mr. Stephen Fiorio. Obviously the smartest man in the room, even when he does not happen to be in that room. And it is Piyush, the big P, in the house. What's going on? LaFraud, James, Tony Notes in the house. Piyush in the house. We need Tanner's little shorts, shorts. Tony Notes in the house. Stockman Mark is here. Mike Hill is here. Stephen the Mountains, I already talked to you guys. Anthony Noto is actually here. I love them apples. Thank you, Tony Notes. Let's see. Thank you, Papa. Mazda, Miata, Corvette, Chia Pet is spreading rumors that Square will buy 4, I guess, of 4 blocks. Stephen the Mountains, Heirloom Cedars here. Good to see you, Heirloom Cedar. Emilio is here. Nice to see you, Emilio. Tevis is still here. I don't know if you left. Thanks for watching, Tevis. I appreciate you. Love all your content, buddy. Let's see. I don't know who the hell else is here. I don't really care. Let's see what SoFi is doing after hours. Get you one more check of the short interest and get you guys on your way. We're trying to keep this under half an hour. Kind of failed 38 minutes, but what are you going to do, guys? So let's take a look, guys. No, still after hours, so down 2 cents, $7.14, 50 million shares on the day. Of course, we know CEO Anthony Noto bought 28,000 shares just the other day, which is a very good thing. Let's get a final check of the live short interest just for shits and giggles here, guys. So yeah, no updates here. 9 million yesterday. Heavy borrowing again, borrowing probably 305 plus million shares now. So, guys, that's the SOFI stock. Ticker symbol is SOFI. What's this turd going to do for the rest of the week? Very hard to say. I mean, we stepped up just since 429 off of this $6.70 level, tested it one more time, stepped up to 685, stepped up to 7, stepped up to around 720, 715. Will we continue to move up in these, 20-cent increments? Max Payne is saying no, but I think there's a chance we break through this blue line. We broke through here a little bit, rejected backs, 50-day moving average. It's either going to break down through $7 or it's going to break up through this blue line. Obviously, there's no room. The wedge is completely out of space. So we'll have to see. If we do break down through the blue line, hopefully we'll gain some support on the aqua green line. We'll hit another wedge down here. But I don't want to wedge down to $4.82, guys. I'd rather get a wedgie right here at $7.01 and explode to the upside. Guys, it is un poco Moss, basic bitches. I would like to thank J Money Not a Lurker. I would like to thank Alberto Bertie Aviles, our two fabulous wrenches and moderators, for keeping the crowd and the hordes under control today. Are you not entertained, guys? Don't like and subscribe, whatever you do. Get a fucking life. Get out there and do something with yourselves. Don't watch you turders. We're all a bunch of idiots. Un poco Moss. Peace. I'm out of here.